Friends, welcome back. Here is our next case study number 40 from CF Final Audit MCQS and Case-Based Scenarios booklet issued by SCI. You can download it from Institute's website. Let's go through the case study. Mr. Suresh and Company, a partnership firm, has been appointed for the 7th consecutive year as a statutory auditors of Alkes Limited, an unlisted public company, for financial year 2021. Mr. Suresh is the engagement partner for the audit assignment of Alkes Limited. The engagement team, before starting the assignment, was made to read the policies and procedures designed to achieve desired quality control with respect to the type of assignment being undertaken. Mr. Suresh referred the engagement letter signed with the management initially and was considering whether there was a requirement to send a new engagement letter in light of the following circumstances in the company during financial year 2021. What were the circumstances? Two senior full-time directors of the company have retired out of the total of 5 directors. 40% stake of company was held by promoters, which was reduced to 5% by selling shares to general public. One more factory unit was set up in Gorakhpur this year. Management has requested to cover 90% of the transactions with respect to each revenue line item. This time, instead of 80% of transactions was sent out in the audit plan, considering the materiality and other factors. The following data is presented from the audited financial statements of Alkes Limited for the financial year 1920. Paid up share capital 8 crores, turnover 55 crore, outstanding borrowings 14 crore, outstanding public deposits 28 crore. Mr. Suresh, while preparing an audit under Section 143 of the Companies Act 2013, made a statement with respect to the remuneration paid by Alkes Limited to one of its directors, Mr. Mahesh, was in excess of the limit laid down under Section 197 and also gave such other details as prescribed. Mr. Suresh, for additional reporting purpose, while auditing with respect to the compliance with CARO 2020, observed the following relevant to Para 3 of Clause 7 of CARO 2020. Statutory dues, undisputed amount, date payable, date paid were given with respect to income tax demand, GST, customs duty and provident fund. Okay. Also, a representation was made to GST development for waiving a penalty of 1 lakh for late payment of GST demand. So this table will go through again, but currently I'm skipping this. The board of Alkes Limited determined interim dividend of 20 lakhs on 20th of May 2021 to its 180 shareholders out of surplus in the profit and loss account, and such dividend amount was deposited in a separate bank with a branch of SBI. Dividend amounting to 1 lakh was not claimed by a shareholder, Mr. Rohit, till 19th of June 2021, and so the said amount of 1 lakh was transferred to an unpaid dividend account on 30th of June 2021. On the basis of the aforesaid facts, you are required to answer the following MCQs. So the first question is about which of the following option is correct with respect to Alkes Limited. So before we go through the options, I would like to take you through the provisions relating to audit committee, internal audit, and the provisions relating to rotation of auditors. Let's quickly go through that and we'll come back to this question. So here you go with our provisions relating to audit committee. So these were the classes of companies which require audit committee to be set up. Okay. So the conditions were all public companies with a paid up capital of more than 10 crore. So we'll go through the question and we'll see if the company is a public company or not, and whether the paid up share capital is more than 10 crores. So Alkes Limited is an unlisted public company. So therefore it's a public company. And the share capital is 8 crores, which is not more than 10 crore. And moreover, a turnover more than 100 crore, outstanding loans, debentures, borrowings more than 50 crore. And these two conditions were also not satisfied. Turnover is not more than 100 crore. Outstanding borrowings, public deposits were not more than 55 crores. Therefore, setting of an audit committee by the company is not required. And then we'll go to the next provision relating to rotation of auditors. Class of companies for rotation of auditors, including listed companies, excluding OPC and small companies. So since this company is an unlisted public company, So the condition is paid up share capital should be more than 10 crore. In the current case, it's just 8 crore. So the rotation of auditor provision is also not applicable to this company. And then we'll go to the internal audit. So we'll go to point number B. Every unlisted public company having paid up share capital of 50 crore or more during the preceding financial year, turnover of 200 crores or more during the preceding financial year, outstanding loans borrowings from public institutions exceeding 100 crore rupees maybe at any point during the financial year, and deposits of 25 crores or more at any time during the preceding financial year. So paid up capital is anyways is 8 crores, so the first condition is failing. Second condition, it says turnover should be more than 200 crores. In the current case, it's just 55 crores. Therefore, the second condition is invalid. Outstanding loans or borrowings from banks and public financial institutions exceeding 100 crores. In the current case, it's outstanding borrowings is just 14 crore, right? And therefore, in the current case, even that condition is not required. And outstanding deposits of 25 crores or more at any point during the preceding financial year. In the current case, outstanding public deposits is 28 crores. Therefore, the provisions of internal audit applies to this company. However, the provisions relating to audit committee and rotation of auditors does not apply to the company under consideration. Now we'll go through the options. Option A says Algus Limited need to form an audit committee, which is wrong, right? Audit committee and rotation of auditors is not applicable to this company. Option A is wrong. Option B says Algus Limited need not to form an audit committee. Okay. Further, provisions relating to internal audit is not applicable, which is not wrong. Internal audit is applicable since the public deposits were 28 crores, which is more than 25 crores. Therefore, option B is also wrong. Option C says Algus Limited need not to form an audit committee. Further, the provisions relating to rotation of auditors is not applicable. However, provisions with respect to internal audit are applicable to it. Therefore, option C is the correct option. Option D says needs to form an audit committee, which is wrong. Therefore, option C is the correct option. We'll go through the next question. Under which section of audit report Mr. Suresh needs to report with respect to the excess remuneration being paid to Mr. Ramesh? Obviously, it's under the regulatory and legal requirements. Option B. So that's where he need to report. And then moving forward, question number 3, what total amount of statutory dues to be reported by Mr. Suresh as per para 3 of Coro? Now we'll go through the provision ones. So in this, go through clause number 7. Whether the company is regular in depositing undisputed statutory dues, including GST, PF, employee state insurance, ESI, income tax, sales tax, service tax, customs duty, duty of excise, value added tax, cess, or any other statutory dues to the appropriate authorities. And if not, the extent of various outstanding statutory dues as on the last day of financial year concerned for a period of more than 6 months from the date they become payable shall be indicated. So it is saying as on the date last day of your financial year, if the unpaid statutory dues and moreover it's undisputed dues, if that is more than 6 months, then you need to report. Now we'll go through a table which shows like this. So statutory dues were noted here, undisputed amount due, date payable and date paid. This is exact the same table as given in the question. Now the number of months due as on 31st of March 2020 were for the first statutory due IT demand payable is 6 months. Moreover, the date paid is 25th of March 2021. Therefore, it is not an unpaid undisputed statutory dues. Therefore, the first one is ruled out. Second one, GST. So, it is paid on 4th of April 2021. However, the number of months due as on 31st March is only 5 months. The provision says if it's more than 6 months, then you need to report. Therefore, GST is also ruled out. Customs duty is 0.8. Date payable is 20th of September 2020. It's paid on 10th of April 2020. Number of months due as on 31st of March is 6 months. So 6 months from the date they become payable falls on 20th of March 2021. But this is still an unpaid due. So if it's as of 31st of March, it's more than 6 months, right? And moreover, it is not paid before your financial year ends. Therefore, customs duty of 0.8 needs to be reported. And then provident fund, it is due on 12th of date payable is on 12th of October and it is not paid till date. However, the number of months due as on 31st of March 2021 is 5 months. So even this is ruled out. The final thing that you need to report is 0.8 customs duty in your para 3 of Caro. Therefore, option B is the correct option. And then we'll move forward. How much amount of interest Alkes Limited would be liable to pay with respect to the amount of unpaid dividend? So, for this, we'll go through the question again, wherein this was covered. Where is it? Yep, here it is. So interim dividend was paid. Interim dividend of 20 lakhs was announced on 20th of May 2021. So, and one of the shareholder Rohit has not claimed his amount of 1 lakh till 19th of June 2021, and the said amount is transferred on 31st of July 2021. They have given it as 2020, which is wrong. It's 2021. Now we'll go through the provision ones. Provision states, just give me a second. So here you go with respect to unpaid dividend amount account. So section 124, it states 124 of the Act provides dividend declared which remains unpaid or unclaimed within 30 days from the date of declaration of such dividend shall be transferred to by a company to a separate account called unpaid dividend account open in a scheduled bank. Okay, such transfer shall be made within 7 days from the date of expiry of the said 30 days. Okay, in case of any default in transferring the amount of unpaid or unclaimed dividend to an unpaid dividend account, the company shall pay interest at a rate of 12% per annum on the amount not transferred. The interest accrue on such amount shall endure to the benefit of the members of the company in proportion to the amount remaining unpaid to them. So it is with respect to the proportion of amount which is unpaid to them. So you need to transfer to the unpaid dividend account within 7 days from the date of expiry of 30 days of declaration of dividend. Now we'll take this calculation once again. We'll go through this. See, here I have made this calculation. Date of declaration as given is 20th of May. 30 days from then falls on 19th of June. 7 days grace period given, which falls on 26th of June 2021. So date of transfer to a separate bank account as given is 30th of June, 31st of July 2021. And the number of days of non-compliance, that is D minus C it is. It's mentioned as E, but it is D minus C, which is 31st of July minus 26th of June comes around 35 days of non-compliance. The total number of days in a year is 365 days. Rate of interest is 12%. Amount of unpaid dividend given in the question is 1 lakh. Therefore, the amount of interest being 1 lakh into 12% into 35 divided by 365 comes to 1,151 rupees. Therefore, the answer to this question is 1,151 rupees, option D. Hope this calculation is clear for you. I'll show you the calculation again here. So if you want to take screenshot or if you want to take notes of it, please do take it. Or if you can, if you want this to be referred, please pause here and take notes of it. Now let's go through the next question. So by what date the amount of interim dividend should have been deposited in the scheduled bank after being declared, and so by what date the amount, the unpaid or unclaimed dividend should be transferred to the unpaid dividend account. So the question can be broken into two parts. First one is by what date the amount of interim dividend declared should be transferred to a scheduled bank. Second thing is the unpaid dividend to be transferred to a unpaid dividend account. So there were two time limits. The first time limit you can take it from here as well. So 7 days grace period is 26th of June 2021. So by this date, the amount of unpaid dividend should be transferred to an unpaid dividend account. Therefore, it is 26th of June 2021. Now we'll go through the options. So the second part of question is answered 26th of June 2021. Therefore, our answer can be either B or D, because A and C were not stating 26th of June 2021 for the second part of question. So option A or option B or option D can either of these will be our answer. Now the question is, by what date the amount of interim dividend should have been deposited in the scheduled bank? It is 5 days from the date of declaration of dividend. I hope I have taken a screenshot. Not. Just give me a second. So here you go with the provision, deposit of amount of dividend in a separate bank account. The amount of dividend, including interim dividend, should be deposited in a scheduled bank in a separate account within 5 days from the date of declaration of such dividend. Okay, now we'll go back to the question wherein the the interim dividend was declared on 20th of May 2021. So 5 days from then you can count easily. 21st of May, 22nd, 23rd, 24th and 25th. So by 25th of May 2021, the amount should be transferred to a separate bank account. Therefore, our option would be option B, 25th of May 2021. For amount of interim dividend should be transferred to in a scheduled bank, and for unclaimed dividend it is 26th of June 2021 respectively. Option B is the correct option. With this we have completed all our case studies in ICI booklet. So all 40 case studies were being uploaded. I received a notification that case study number 9 is being revised. I'll try to do that as well. But as of now, all our 40 case studies were being uploaded in the YouTube. You can go through the playlist. You'll find all 40 case studies over there. If these videos were useful to you, please comment or like, share and subscribe to the channel so that I'll feel happy that yeah, these videos were helpful to you. And do share with your friend and help them to revise as quickly as you are doing. Thanks for watching.